Hello and welcome to the show. It is March 22nd, 2022 at the time that I am making this video. Let me start by saying that I am not a financial advisor. This is not financial advice. This information is intended for entertainment and educational purposes only. So it's been a while since my last video. So for those new to this channel, I'll be talking about stock symbol MMTLP and stock symbol MMAT. That stands for Metamaterials, which is MMAT, and MMTLP is the Metamaterials Torchlight Preferred Shares. The Metamaterials Torchlight Preferred Shares are shares that will pay a special dividend based upon the sale of oil and gas assets in the Oro Grande Basin in Texas. So let me start. Let me start by talking about a different stock. I'll be talking about Canberra Energy. Stock symbol CEI. I've covered this stock a little bit in the past before. And if you look at this, you'll see that it's gone from 45 cents to almost $2. And after settling down to about 92 cents. This isn't really settling down, by the way. This stock looks like it's a coiled spring because it's got a bunch of oil. It's got a bunch of oil and gas assets, and it's got a lot of people buying it, and it's got a fair amount of short sellers. So keep an eye on this. I'll be making a video about Canberra Energy soon, but just FYI, it could easily reach its previous high of $4.50 a share easily, and go beyond that quite easily as well. This is Metamaterials Torchlight Preferred Shares, stock symbol MMTLP. It's excuse me. It's been trading since excuse me. I ate some peanuts earlier. Anyway, it's been trading since October, and this is the entire price of the trading history since the time it was available. It started at 0 cents, and it's gone a long way up since zero. Anyway, so the way Metamaterials Torchlight Preferred Shares works is that Metamaterials and the company Torchlight merged. Torchlight Energy had some oil and gas assets, that they were developing in the Oro Grande Basin, that's in Hudspeth, Texas, near El Paso. And they plan to sell those oil and gas assets, and they plan to disperse those, the proceeds from that, to the holders of the preferred shares, which are MMTLP. Okay. As a result, the price has been flat. This is Metamaterials, stock symbol MMAT, as you can tell. It's been moving sideways for the most part. $1.94 today. But, headed towards $2. Could be headed upwards. This is what Metamaterials looks like in the recent past, so it could easily get back to $20. Metamaterials was the subject of a short attack that was announced sometime around the $5 point in October or so. And since then, they shorted it all the way down to below $2. Looks like it's getting close to the $2 mark. And part of the reason that I showed stock symbol CEI is Metamaterials, stock symbol MMAT, and CEI are both being shorted by a company called Kerrisdale Capital. So as either company starts doing well, Kerrisdale starts getting a little bit nervous and antsy. And it could be beneficial for the other company. Anyway, so I think Metamaterials could easily get back to its $20 share price. And it has a lot of stuff going for it that could cause it to squeeze and go much higher than $20. But that's not going to be covered in this video. This is the price of oil. This is specifically West Texas Intermediate, which is the price of oil that is sold in Texas. It's over $108 a barrel at the time of this video. It got as high as 125, maybe 128 or so. But it's come back down a little bit and recovered. Right? $108 a barrel. As we know, a lot of this is because of the war which took place in the Ukraine, between Russia and the Ukraine, of course, right? Russia invaded the Ukraine, and that caused a spike in the price of oil. But if we look at that, prior to the war, the price of oil has been going up anyway. So I'm thinking the war premium right now is only about $10 to $12 a share. It's not too bad, you know. So the war could have a bigger effect on the price of oil than what it has right now. So maybe the war isn't priced in it insufficiently, for all we know. Anyway, so I saw this tweet by Just Michelle. It's a great tweet. She looks at, she's found an article that says, hey, look, $200 per barrel is possible because Russia's supply could be considered to be gone for good. What? Gone for good? Well, yeah, gone for good. Thank you, Just Michelle, for this tweet. Anyway, this references a Market Insider article, and the Market Insider article says that commodities trader Pierre Andurand said Russian oil is out of the market for good. Okay, and that's 4 million barrels a day are out of circulation since Russia's attack on the Ukraine, right? 4 million barrels per day. And he thinks the price of oil could reach $200 a barrel. Okay, and that's in order to keep demand down because, quite frankly, demand is pretty high. And demand doesn't stop because of a war, okay? So the whole thing is, he says that if Russia and Ukraine stop fighting, the oil doesn't suddenly come back. It's still, you know, they're still not allowed to sell oil to the U.S., and other people aren't going to buy their oil as a result. So that's about 4 million barrels a day that's out of circulation. It's gone, okay? The oil's gone for good. You're going to have to live with higher prices, and that's just to keep demand down, right? So you got supply and demand. Yeah. So that's basically what that what the Market Insider article is about, you know, or that Business Insider article is about. So just FYI, during the last week or so, the metaverse or the metamaterials Torchlight Preferred Shares universe got into some sort of weird family feud. I don't know the reason for it. I don't really care. But there's some family feud going on about metamaterials Torchlight Preferred Shares being risky and metamaterials and this, that, whatever. I'm not going to go into that, okay? Do your own research. Form your own opinions, you know, and, you know, you do you, I'll do me, whatever. Make your own decisions. Do your own research in the matter, okay? I happen to own shares of metamaterials Torchlight Preferred Shares and metamaterials and Camber Energy. And I think these shares will do quite well. And as a result, I think the shares will do phenomenally well, to be honest. I'm not a financial advisor. I don't need to make a YouTube channel about this because I make no revenue from YouTube. I don't expect any revenue from YouTube. I don't solicit, money from any subscribers. I could care less. I expect to do quite well out of this. Okay. And the reason, so some of you may know this, some of you may not. The reason I make these videos is I get together with some friends of mine. We talk about stocks, stuff like that. And, I like to tell them what my thoughts are. And this way, sometimes my friends say, hey, I missed what you said, at such and such a talk on, that last weekend. Can you go over it and all that? And I said, hey, just look at the video, right? It's up there. It's on YouTube. You can have a look at it. I didn't expect to get subscribers, but I got some, so great. But I'm not a financial advisor. These videos are basically a method of me communicating with my friends. My friends, most of them think that what I buy is, pretty high risk. But, they're like, hey, it's got something that they like to call, that most people would call asymmetric upside, right? It's got so the most you can lose is, like say 100% or so, right? The most you can make is like 10,000%, who knows, right? I'm not saying what the top is and what the top's going to be and how high it's going to go, but in general, part of the reason that I own these shares is I stand to make much more than I could possibly lose, right? If I lose 100%, it's unlikely, but I'm not going to be crying. But I stand to make a hell of a lot more than 100%. So I call that asymmetric risk, right? Anyway, I do me, you do you. Everyone's financial situation is different. I'm not a financial advisor, and I'm not advising anyone, okay? So I don't know why the metaverse is having this family feud. Everyone should just, deal with their own finances and not try to like influence other people saying, hey, this is people should know, right? Anyway, so that leads into what I call my own rules that I have, which I use to keep my own sanity, because I do a fair amount of investing. These are my rules. I'm not saying you should adopt these rules. I'm just letting you know what my rules are, okay? I'm not advocating these rules for anybody else but me, because it works for me. These are a lot of my rules, okay? They're not all my rules, but they're a lot of my rules. If you want, you can take a snapshot of this, pause, and have a look at them. I'm not going to go over into every single rule. There's a fair amount of them, right? There's 12 on the screen. I'm only going to go over some. This is the first rule, okay? The first rule is never invest more than you can afford to lose. This should be obvious to most people. It's but it's not. It really isn't. So part of that, never invest more than you can afford to lose, basically means never use margin, or I don't use margin. I don't borrow money that I don't have in order to try to make more money, right? Because there's an old saying that markets can be rational longer than you can remain solvent. And that's certainly true for margin accounts, okay? I don't do margin. It doesn't work for me, A long time ago, maybe, I don't know, 40 years ago or so in my life, I got a margin call. And the reason I got a margin call was I was right. The stock price was headed upwards, but before it headed upwards, it headed downwards. And I was fully extended, and it was stupidity. And I learned my lesson. I said, screw that. Never again. So I don't do margin. I also don't short. The reason I don't short is I understand that shorts have infinite loss potential, right? A stock, if you're long a stock and it goes down to zero, you lost 100%. Okay, sucks. But with a short, you can lose more than 100%. You can lose 1,000%. You can lose 10,000%. Right? The stock can go the wrong way. It can go to infinity, in which case you're liable for that stock at infinity, and you will at that point get margin called. So I don't do shorts either, right? Again, this is me. This is my rules, okay? And no matter what my position is, I'm comfortable enough with the position that I can sleep at night, right? Because I have zero chance to make any rational decisions with little to no sleep. What does that really mean, right? It means that, hey, a lot of people are like, hey, I'm fully invested in the market. If the market crashes tomorrow, I'm going to be so, I'm going to be so upset. Right? A lot of people, get upset about that. And it's true. So a while back, about, I don't know, let's just say a year and a half ago, right? I was, was walking along through life and all that, and I come across this news article, or I come across this rumor of a news article from Goldman Sachs. Basically, they said that, hey, look, there's this company out there called GameStop, and it's shorted more than 100%, and it's impossible for the shorts to cover. So as a result, it's possible that the price of GameStop will go up significantly. But if that happens, then the shorts will be unable to cover, they'll be forced to buy GameStop. And that means that they'll have to sell everything else that they own to buy GameStop, to buy something that they cannot possibly ever fulfill. That means that they would sell everything. That would trigger a massive drop in the Dow and the S&P 500 and the overall stock market. Now, that's crazy if you think about it, right? That one company called GameStop could friggin' crash the entire market. And that would make me uncomfortable to sleep at night if I was long the overall market, right? And of course, I have a long position. I I have mainstream stocks as well too. I have semiconductor stocks, all that, whatever, right? And all that stuff would crash overnight because of a retailer, GameStop, that was valued at less than, I don't know, $400 million or something like that. And suddenly it's worth, what? More than the entire stock market? So you know what I did? Because I don't like to be able to be awake at night worried about crap. I bought GameStop. That's the answer, right? If you think that this one company can destroy the market, your only solution to be able to sleep at night is to buy that company that could crash the market, because that way you are hedged against it. If the market crashes, then you're fully, you made up for that money on with the company that you bought. It works, right? That's rule 1. Rule 2, know your investment. You know that story I just told you about why I bought GameStop? That's knowing your investment, right? Understand why you invested in something. You should be able to explain your investment in 1 minute or less. That's called an elevator pitch, right? This is required knowledge for most CEOs of startup companies, and most CEOs should be able to explain their company. And if you can't explain your investment or the reason that you invested very easily, it's probably too friggin' complicated, right? And if it's complicated, that means the chances of success is very small, right? And what happens if you're wrong and things are not what you believe it to be, right? And you want to be able to explain things very easily. Occam's razor. It's got to be quick. It's got to be simple. Know your investment. Know why you invested in anything. That brings me to rule 3, right? Every single investment has risk. If someone tells you that this is a zero risk guaranteed play, they're lying to you, or it's a guaranteed loss. It's one of those. There's no such thing as zero risk, right? The S&P 500 is not zero risk. Buying the S&P 500, the market can frigging crash due to a mortgage-backed securities crash, right? The market can frigging crash due to a war in the Ukraine. Things have risk. Know what your risks are, okay? Of those risks, you can categorize them into 2 different categories. I like to put them in 2 broad categories, right? There's things that management of that company can control, things like expenses, inventory, execution of their plans, right? If they plan to build a new factory, they can, that's under their control for the most part. Right? Things they can't control are things like acts of God, right? A war in the Ukraine, market conditions suddenly going bonkers, like the price of nickel suddenly headed to the moon, or nickel not being available, right? So know what the risks are, and every investment has risks, okay? Know what they are. Rule number 4, okay? Understand what the upside and downside potentials are, right? Like when I invest in a mainstream media stock, in a mainstream stock, like a semiconductor stock or something like that. Well, I have a significant number of semiconductor stocks, by the way. Anyway, when I invest in stuff like that, I know what my probability of returns are, right? I'm not expecting 100% return in less than a year. I'm not. It's a mainstream stock, right? I mean, and I know what's considered to be a reasonable upside for that investment, right? So know what's reasonable upsides, know what reasonable downsides are. Also know if it's possible to get a short squeeze, right? Short squeezes can affect what's reasonable, right? And if a short squeeze is what you're looking at, find out what would be required for that short squeeze. Understand what those upsides and downsides are based upon, what would be required for your thesis to come into fruition. Rule number 5. Every single buyer has a seller. Know who's on the other side of your trade. Know why they did what they did, because they did the opposite of you, right? And also know what kind of resources they can spend, because they can make their belief a reality, but it's going to take resources, right? Now, for a lot of stocks, the other side of your trade might likely be short sellers. They could be market makers. You don't know. Let's say that they're short sellers, right? It's possible they might be overextended. You should know that, or you should, come to a calculation or something to know if they are. It's possible they might have shorted more than 100%, right? It would be good to know things like that. Understand that kind of stuff, right? I told you I wasn't going to go over every single rule. This is rule number 8. This is one of the most important rules for me. Listen to the mainstream media, okay? They'll tell you how to lose your money. do not necessarily do what the mainstream media tells you. Listen to what they say and listen to how they say it. Very often they'll frame things, they'll frame questions such that you'll think of the answer as a yes or no. But the yes or no is it's called getting caught in something called a Hegelian dialectic, right? Once you frame the question, then there's a set of possible answers that your brain automatically goes to. Don't necessarily go in those directions. Don't limit your thoughts to those conclusions that, are obvious. Think about what the question is. Think about, who's behind the media. Think about what the media stands to gain from this, or lose from this, or who runs the media, who owns the media, right? And if you don't think the media is owned by someone, then, well, I'm not going to get into that. So, with that, now that you know what my rules are, these are my opinions on MMTLP. So, as I said, I haven't made a video in a while, so there's a lot of stuff. So, it is March 22, 2022, and still we have no word from George Pelecaris about his presentation on the MMTLP shares. So, that means that that's making me nervous, really, right? So that leads me to think. They're trying to sell oil lands, right? So how do you sell your oil lands? What do they have to do, right? So it all depends. If you don't have too much oil to sell, then it's not too hard, right? But in this case, they got 3.2, maybe 3.7 billion barrels of oil. And that's a lot of friggin' oil, okay? So they got to sell a lot of oil. And that means there's a limited number of buyers. And they can pretty much tell who those buyers are, right? So let's look at what metamaterials should be doing. They should be looking at it from the buyer's perspective, right? Flip the roles around, right? From a buyer's perspective, in terms of rough numbers, you got 3.2 billion barrels of oil. Oil's at $100 a barrel. It costs about $30 a barrel to get it out of the ground. And if you say a 12% valuation because the oil's in the ground and, the oil's down there, it's going to be, you're talking about you're talking about something like a $27 to $31 billion deal, or a $27 to $31 billion expense. And all they got right now are test wells and no infrastructure. No infrastructure means no pipelines, okay? So they got to have some way to get the oil out, and all they got are test wells. So dinky little wells. So that represents risk. But it's a fair amount of oil, but it represents a fair amount of risk. So metamaterials should be working to de-risk that, right? They should be trying to lower that risk. Basically, de-risking means converting test wells to production wells, one or more, right? And at that point, that should be the next step in the process, right? You want to do some production. Prove that the wells can actually make some oil, right? Convert the test well to a production well. And what that involves is increasing bore sizes, do some lateral drilling and fracking, because that's what people do in production nowadays, right? You don't necessarily need to store a lot of oil. You just need to sell it to a refiner. Okay, there's one in El Paso, so it's not too bad. But all of that's going to take a bit of money. And so one way to do that is to take some loans, which they've done. So the loans are guaranteed by Greg McCabe. So he's a guarantor of the loans. And so I think that they're moving ahead with that, right? So that basically means that they're going to be selling some oil. That produces a revenue stream. That means that they're an oil company, okay? That likely means that they need to spin out Oil Co. prior to the sale, because metamaterials does not want to be an oil company. But when you're producing oil and selling oil, and you got an oil revenue stream, you're an oil company. So that likely means a spin out to Oil Co. Okay? This is pure speculation on my part. I have no knowledge of any of this. This is just what I'm thinking off the top of my head, right? This is what I'm saying is likely. But, this is it's what I'm thinking. So there. So how long is this going to take, right? Because we've been waiting forever, to be honest. We've been waiting a long time. Well, we've been waiting since at least the end of 2021, which is when they said they were going to sell the oil. Then we got word that it was going to be early 2022, early Q1 of 2022. To me, that means January, because you got January, February, March. January's early. That ship has passed. Now they were talking about something in March, and finally there's, maybe a March presentation. A lot of people out there are saying, when divvy? People are getting tired out there. But in the meantime, the price of oil is $108 a barrel. So at the time, if they sold the whole spiel in December, you'd be looking at something around $60 a barrel, or, but now it's the $108 a barrel. So at least based upon the amount of time you got to wait, the price of oil's gone up. You're going to wind up with more money. Okay. If it's any consolation, it's going to be more money. Okay. Now, I'm not an oil expert, but, right now we know that the wells already exist. They got a permit for lateral drilling that I've seen. Looks like they're working on that. So how long will it take? I don't know. Maybe Q2, Q3? Because Q1's almost over, so it's got to be at least Q2, I think. Yeah, so, maybe Q4, but I'm hoping it's by Q2 or Q3. That's what I'm thinking. Again, I'm not an oil expert, but, on the other side of that, you got buyers, right? The buyers want to get the land at a discount. They also want higher certainty. So you do the development for oil co. Buyers are happy because you got higher certainty, right? That's good. But at the same time, the buyers want to get a discount price. They don't necessarily want a higher sale price. But they do want that higher certainty. So if you're a buyer, you got that push and pull, right? And you got to come up with what you think is your happy medium, okay? Again, this is pure speculation on my part as to what's going on, right? So I have no knowledge of any of this. I'm just speculating. That's what this video is about. With that said, a lot of people are brand new to oil and gas. I'm not an oil and gas expert, but there is some specific vocabulary and language being used, and a lot of people may not be familiar with that, so I'll just quickly go over some of that stuff. Vocabulary and language had to do with some miscommunication. We saw this slide come up, and a bunch of people looked at this and they said there's $73.5 million in assets for sale, and that's what's going to be paid out for the preferred stock dividends. Divide that by 165 million shares of stock, you get about 45 cents a share. That's all we're going to get. Now, when people started saying that, I said, I think these numbers are the same as the old numbers in June of 2021. And the reason I said that is because they mostly are. I mean, they're very close to the same numbers, just about. But if you look at the Form 10K, I've been told, right, and it's true. If you look at the Form 10K, it says the numbers were updated as of December 2021. So what's going on here? Numbers are updated, okay? Stuff ain't worth anything. This is the Form 10K. And if you go to page 18, you'll see this, okay? As of December 31st, 2021 and 2020, the company has no proved reserves. The Hazel and Oro Grande projects consist only of unevaluated projects in progress of development for future production, okay? Later on it says, as of December 31st, 2021 and 2020, the company's proved non-producing reserves total were 0 barrels of oil equivalent, okay? At the end of 2021 and 2020, reserves did not include any value for proved undeveloped properties. What does all that mean? Basically, what that means is that, okay, as if reserves did not include any value for proved undeveloped properties, okay? Basically, that means that the Hazel and Oro Grande project consists only of unevaluated properties in the progress of development for future production. The Hazel and Oro Grande are on the books with 0 value, okay? The Oro Grande project is on the books with 0 value. So you might be thinking, what the hell? There's 3.2 billion barrels of oil. How can that have 0 value? Well, I made a post about this on Reddit, and here's a link to it. Okay? There's basically a couple categories of how you defined what oil is, or how much reserves there are, okay? There's something called proved developed reserves, proved undeveloped, probable, and possible. Okay, and if you look at proved reserves are they're those quantities of petroleum which by did I skip something? I did. Yes, proved reserves. Okay, these values over here, these specifications of proved, developed, proved, undeveloped, probable, and all that, they come from the SPE, right? The Society of Petroleum Engineers. Links are provided over here. You can look up what they mean. And they have a specific definitive meaning, and it's a specific language, right? Proved reserves are those quantities of petroleum which, by analysis of geological and engineering data, can be estimated with a reasonable certainty to be commercially recoverable from a given date forward from known reservoirs under current economic conditions, operating methods, and government regulations. Proved reserves can be categorized as developed or undeveloped. Okay, that seems reasonable. Why are the proved reserves zero? You would think that they would not be zero, right? In general, proved reserves are considered proved if the commercial producibility of the reservoir is supported by actual production or formation tests. We know there's no production going on there, okay? So as a result, it's not proved, okay? Later on, they say, for 3.2 billion barrels of oil, the buyer's going to want production data to prove that it's commercially viable, right? That's what proved is going to mean for 3.2 billion barrels of oil, okay? And reserves may be classified as proved if facilities to process and transport those reserves to market are operational at the time of the estimate, or there is reasonable expectation that such facilities will be installed. They don't exist right now, okay? Oro Grande is not developed. We all know this. So that's why it's definitely not proved developed. Okay. Reserves in undeveloped locations, think Oro Grande, may be classified as proved undeveloped, provided the locations are direct offsets to wells that have indicated commercial production. Well, no wells have indicated commercial production there. They're definitely not proved undeveloped as a result, right? And there's a bunch of other properties that they have to have, right? It's reasonable that certain locations are within known proved productive limits of the objective formation. Locations conform to existing well spacing regulations where applicable, and it's reasonably certain that the locations will be developed. That's how you get to proved undeveloped. But right now you can't get to proved undeveloped because there's no commercial production there, right? So at best you're at probable or possible. So when Oro Grande gets approved, there's going to be a massive increase in the asset valuation on the books. And that's going to lower the risk for buyers of the oil and gas assets, right? But it's also going to mean higher prices for those oil and gas assets. And the way you get there is commercial production wells. That's the path to proved. And that's what I think is likely going on, right? That's what I'm guessing, okay? So that's where we're at, and that's why I think what I think. With that said, that's the end of the video, and it's March 22, and I'm not a financial advisor. This is not financial advice. This information is intended for entertainment and educational purposes only. Goodbye.